In this video, we're going to look at the top stocks over the last 5 years and also what was the driver behind those big returns that they witnessed. They all made over 1,700% in the last 5 years. So let's dig into what caused that. And there is definitely a common theme running through all of it. So on each one, I've put a little bit of information. So NVIDIA up 1,700% over the last 5 years. And just some stats here. Don't have to read through all of them, but basically big earnings increase from 2018 into 2023. That's expected to continue. Analysts projecting up to $20, $21 per share in 2025. We're at $7.58 in 2023 earnings per share. So a huge jump again. Sales also ballooning and expect to continue to grow into 2025. So there we already have a clue about what drives big stock gains. It's sometimes what they're doing, but it's also what is expected to happen in the future. Stock prices are based on expectations. If you think a stock is going to fail in the future, you wouldn't want to own it right now. So you sell it now, even though the failure hasn't happened. Same with if you think great things are ahead for a company, you buy it ahead of those great things happening. So metrics such as PE, which is price earnings ratio, these things aren't as useful for rapidly growing companies because through 2023, when the stock was climbing, the PE reached as high as 258. A lot of people thought, oh, this stock is way overvalued. But earnings are also climbing, and that resulted in the PE actually dropping to 60. Wow, and then the price just kept going up. So high PEs sometimes don't mean anything because if those earnings are increasing, then that PE could drop even with the price continuing to go up. Elf Beauty, ELF, up 1,800% over the last 5 years. And again, we see the same story. Lower earnings 5 years ago, they've really ramped it up into 2023. Analysts are expecting that will continue to just keep motoring on into 2025. Big increase there in earnings from 2023. Sales nearly quadrupled between 2018 and 2023, and analysts are projecting sales growth of 24% for 2025. So we can just see that kind of steamroller. It just keeps going, and this is what drives big stock gains. Is the company ultimately has to deliver, and we're going to look at an example where the stock didn't. But if the company can deliver, and you have these big expectations of what they can deliver in the future, people are generally going to be very eager to buy that stock and is going to go up. Again, we see that PE doesn't matter so much. It's been high all along, and despite that, the price just keeps going up. Cassava Science up 2,168% over the last 5 years. Quite a crazy run this stock has had. 5 years ago, it was about $1. Then it ran up to $146 in 2021, then fell 90%, and now it's down. Now it's trading kind of around $25. It has zero sales. It's had negative earnings per share all along, and it's a pharmaceutical or a biotechnology company. So this kind of movement, this is maybe an extreme case, but we see this fairly often in biotechnology and pharmaceutical companies where they're producing a product which may make it to market. It's got to go through all the trials and everything, and it could create large sales, but ends up failing to do so. So you end up with these huge up moves on enthusiasm that maybe they'll be bringing something great to market, and then it ends up falling flat, and everyone sells the stock, and we go through these big, huge up and down moves. Ultimately, though, still up 2,000% since 5 years ago, but what a vicious ride anyone in this stock would have been on. So again, shows that expectations drive price. This, they never had any earnings, they never had any sales, yet people were betting that maybe they would, but it never came to fruition. Celsius Holdings, CLH, sales from $53 million in 2018 to $1.1 billion in 2023, just stepping it up every year. EPS was negative in 2018. Analysts are projecting 76 cents per share in earnings in 2023 and 96 cents per share in 2024. PE ratios, again, have always been very high. Shows that, the stock's performance isn't based on always what the company's doing, but what investors expect it to do. So, this stock's been going up for a long time, been wrapping up the sales. We'll look at charts at the end. And it's had some ups and downs too, for sure. But we're seeing that investors continuing to push it up just based on that expectation, and 56% per year expected EPS growth per year over the next 5 years. So all that just keeps driving. So, kind of the more forward looking some of these people are, they might be buying, years in advance of even a company being profitable, just because they forecast out what it is, and analysts are forecasting these numbers out 5 years in advance or so. So a really big run there, one of the best ones. And at least from the stocks we looked at, I just looked at stocks that were over a $5 share price currently, over $1 billion market cap. So I didn't look at every single penny stock or anything, but just kind of the bigger names out there. And from those, super microcomputer 4,200% higher over the last 5 years. And we just see that the earnings jumping from 2018 to 2023, almost a tenfold increase in earnings. Not quite tenfold, 8-9 times. Analysts project EPS to be $28.43 in 2025. So again, seeing another big jump. So again, that expectations of the future helps drive price. When you start to see those expectations decline, if all of a sudden analysts started projecting that, they're going to maybe only be around the same as what they're making, I think that stock would drop. Probably, because people have now kind of built in an expectation that this is what might happen in the future. They might hedge their bets a little bit, but at the same time, this starts to get built in where analysts, traders, everyone's kind of expecting these bigger numbers from the company. And if they don't deliver, or even if the expectations start to drop, then we could see the price drop. It also works in the opposite direction. If you see those expectations continuing to increase, that helps drive stock prices higher. Same thing with the sales. They've just been going up, projected to continue going up into the future. The super strong earnings growth started in 2022, and since then the stock's had a tenfold increase in just a couple years. Analysts are projecting average EPS growth of 48% per year over the next 5 years. So again, that growth story of expectations. Just one quick slide on how these stocks have performed. So I've thrown them all on here. This is a logarithmic chart. You can see it's not quite scaled, but it allows it to, you can see a little clearer the decline. Otherwise, these would all just look very like parabolic. They'd start way down here in the corner of the chart and then shoot up. This shows everything kind of scaled percentage-wise. So we can see Sava here, started down here around $1, had its meteoric rise up to around 145, dropped all the way back down to looks like about $15-16, and then dropped back to 14. Now it's at 25. So, really volatile. Would have been, nice to be in over here. Not so great once the good expectations went away and the stock dropped 90%. Even some of these other ones, we can see the red ones, that's NVIDIA, was up here, kind of north of $300, fell back down to around 110, so a pretty big decline. If I recall, it was like 60-70% or so. And then it had its big run. So just because these stocks have had huge runs doesn't mean they had big declines. Just be aware that in investments, you have to decide whether you're willing to hold through the big declines for the 1,000% plus gains, or if you'd rather be more of a swing trader type, getting in when these rallies are underway, and then once they start to break some trend lines and moving averages and things, you get out. So those are the top 5 stocks over the last 5 years, along with some of the drivers that help fuel those big returns.